Hey guys, it's Billy Williams. Absolutely appreciate you guys being here today. We've got our 90-minute session on staffing and training an insurance agency, even when insurance premiums are going up. And we know that that is the deal right now. Insurance premiums are rising, and it's causing a demand on some of our staff that they may not be comfortable with. It's causing them to have conversations that they might not be comfortable with. It's causing them to buck a lot of the processes that we have in place because they're more concerned about being yelled at or fussed at or anything like that. So we're going to talk about the things that they can do to make sure that they explain to a customer how they can influence the rate. We're going to talk about the things that they can do to make sure that the processes are still working. But we're also going to talk about what you need to do in general, because at the end of the day, if you've staffed your agency with people that are afraid to have conversations, if you've staffed your agency with people that are afraid to explain to customers why rates go up and why carriers do what they do and all those other things, then you're going to have a problem long term because rates are not coming down, okay? Not going to happen. So we want to make sure that you're staffed effectively and appropriately for the future of your agency, not just getting through this one cycle of rate increases. Ladies and gentlemen, we have one job as insurance agents. One job. Offer the coverage that best protects our customer should they ever have to file a claim. And we can guarantee we do our one job by establishing and working from our agency level minimum recommendation coverage standards, by working from our processes, by working from our guidelines, by understanding the conversations that we're supposed to have. But really, the basics, the basis is agency level minimum recommended coverage standards. The reason why your people are having issues is emotion. Emotion, okay? And we need to learn to control that. But first, we have to understand how we make money as insurance agents. There are 6 ways an insurance agency makes money. 1, new policy sales. These are brand new policies outside of our customers. These are just us going out prospecting, marketing, bringing in new business. Number 2, new policies for existing customers. This is us cross-selling, rounding out accounts. Number 3, increasing coverage limits on existing customers. So these are customers that have no coverage or they have low coverage, and we're bringing that account up to standard by introducing those coverages. Then there's retention. Everything we do is designed to retain our book of business. Then there's profit sharing and bonuses. Well, guess what? If we're writing new business, if we're getting new policies for existing customers, if we're increasing coverage limits on existing customers, we're increasing our total revenue. If we're increasing retention, we're doing phenomenal. That's going to naturally increase our profit sharing and our bonuses. And I know a lot of you are saying, well, no, Billy, what about our loss runs? Well, here's the deal. What do we mean by our loss history? What do we mean by our loss ratio? It's dollars in versus dollars out. So if we're writing new policies, we've got new policies, we're rounding out our accounts with new policies for existing customers. We're increasing coverage limits, even if we're only bumping it up $5, $10, but we're increasing coverage limits on existing customers. We're driving our retention numbers, then we're going to have more dollars in, which means that if we do have losses, it won't impact our profit sharing as much. Here's the other thing about retention. When a customer voluntarily increases their premium because of your recommendation, that customer stays with you 3 renewals longer. So while a lot of you during this rate increase window are going, let me remarket, let me shop, let me find you a lower price, let me do all this other stuff without ever walking through and actually figuring out, is it a problem? What you're doing is you're actually hurting your retention, because the customer is saying, well, guess what? If I can find a cheaper price, or if my agent can find me a cheaper price that quickly, then I probably can find a cheaper price that quickly as well. So why wouldn't I go out and find something? It's almost like I've had something and it's cost me $10 a month. And then I find out that there's something out there just as good that costs $7 a month. Well, guess what I'm going to do? I'm going to drop to the $7 a month one. So while a lot of you are going through this rate increase window, you're actually hurting yourself. You're actually killing your own retention. You're actually causing your customers to shop, causing your customers to go out and leave you because you're making your product a commodity. You're making your product seem so simple, so easy to replace that you are now being replaced. So I'm going to teach you some ways where you don't devalue your product, but you still give the customer the best quality possible.
This was just a brief snippet, just a taste of the type of mentoring that we provide at Inspire Nation Business Mentoring. If you want to hear the complete session, check out our website at www.inspireanation.org. Again, that's www.inspireanation.org.